Investors, hello! This is AI Crypto Insights channel, a few minutes of AI-powered insight into the market. Just a reminder, this is for educational reference only, not investment advice. Today, we're parsing a piece from The Motley Fool by author Bram Berkowitz. It's called, Here Are All 50 Cryptocurrencies That U.S. Investors Can Buy on Robinhood. These three are the best of the bunch.
Okay, let's dive right in. The crypto world has just blown wide open for retail investors. 50 choices suddenly on the table. The real trick isn't just getting access anymore, it's figuring out where to even start. So how do we cut through all that noise and find what's actually promising? Let's break down this analysis.
So first things first, how did we even get here? To really get why your Robinhood app suddenly looks like a crypto candy store, we've got to look at a huge shift that happened behind the scenes with regulations.
For the longest time, platforms like Robinhood were playing it super safe. They were, pretty worried the SEC might classify some cryptocurrencies as unregistered securities, which is a big headache. But lately, the regulatory tide has started to turn, becoming much more pro-crypto. And when that happened, well, the floodgates just opened, taking us from a handful of tokens to over 50. So what does this new universe of options actually look like? Honestly, the sheer scale of the list is pretty staggering.
So yeah, the platform now lists 50 different digital assets. And for any investor, I don't care if you're a seasoned pro or just dipping your toes in, this creates an incredibly complex decision. You've got the big household names right next to things you've probably never heard of.
And that right there, that's the heart of the problem now. We've moved past the days where just getting crypto was the hard part. The new challenge is selecting the right crypto. This list has everything from the giants of the market to some, highly speculative meme coins. Trying to navigate that without a clear game plan, it's tough.
And the variety is just wild. When you see an asset literally named cat in a dog's world trading right alongside Bitcoin, it can be pretty disorienting, right? The tough reality is that a lot of these newer assets just don't have a clear long-term investment case behind them.
And it doesn't stop there. You'll even find one called Peanut the Squirrel. Now, as entertaining as that is, it really highlights just how much noise is in the market. Which brings us to the most important question. How on earth do you filter the real signal from all this noise?
That's exactly where a disciplined approach comes into play. The author of the article proposes a logical filter, a really clear investment framework, to systematically cut down these 50 options into something much more manageable and, frankly, more fundamentally sound. This framework is built on three key pillars. Okay, first up, only look at assets built on strong, robust blockchain networks. Second, you want to find tokens that offer some kind of unique diversification. And third, and this might be the most important one, focus only on those with a legitimate, real-world investment case. So after applying this rigorous filter to that entire list of 50 cryptocurrencies, the analysis zeroes in on just three that stand out from the pack.
And the three that make the final cut are Bitcoin, Ethereum, and Solana. According to this analysis, these are the best of the bunch, the ones that actually survived that tough filtering process. All right, so now let's dig into the why. Why these three? What's the specific investment thesis for each of them that made them stand out when 47 others didn't make it?
For Bitcoin, the argument really boils down to one powerful idea: its position as a potential store of value. The author pegs it as the top choice specifically because of this digital gold narrative. Let's break that down. The whole value proposition rests on a few core ideas. You've got a finite supply, capped at 21 million tokens forever. That creates scarcity. It's perceived as a hedge against a weaker dollar. It's the one crypto most likely to get picked up by Wall Street. All of that creates a really interesting supply and demand dynamic. Now, when we turn our attention to Ethereum and Solana, the whole conversation shifts. We're moving away from digital gold and into the world of technological utility. Ethereum has that massive first-mover advantage, making it the dominant network for decentralized apps. Solana, on the other hand, is all about technical superiority. It boasts incredible network speed and transaction potential. One really important thing they have in common is that both are built on a proof-of-stake mechanism. And this is a huge deal because it's way more energy efficient than older methods, which is a key factor for their long-term viability and their ability to scale up. So what's the bottom line for these two? Well, their value is completely tied to the adoption and the utility of their underlying technology. They are the infrastructure for real-world uses, like issuing stablecoins or tokenizing assets. The logic is simple. The more activity on their networks, the more demand there will be for their tokens. AI analyst verdict.
The analysis suggests that in a very crowded field, focusing on assets with clear narratives, digital gold for Bitcoin, and technological utility for Ethereum and Solana provides a logical investment framework. So what do you think? Does this analysis align with your own thesis? Share your thoughts in the comments. See you next episode.